Hi, this is Paul from globaltradingsoftware.com, and this is an oil futures trading tutorial. We're on the 3-minute Heikin-Ashi chart here, so going from really day trading to scalping really, but I'm using a roller coaster. I've put some support and resistance zones on here. I'm on the trading view platform, so the Guardian zones is not available for trading view at the moment, so I've drawn them in manually. So the red zones are taken from the 60-minute time frame, the blue zones are taken from the 15-minute, and this amber zone is taken from the current time frame, which is the 3-minute. So the idea of this is to frame your chart so you're not shorting into support or going long into resistance. Any trading indicator that gives signals gives it a certain criteria. It doesn't take into consideration support and resistance because that changes regularly. Whereas the criteria for a roller coaster signal is always set, and it will be ever set in time. So what you've got to do is trying to find the reasons not to take those signals, whether it's this or any other. But with the roller coaster, this is great for trading between the zones. So a lot of these were little winners with a roller coaster. Where you see the red line coming down, that's a trailing stop. So that was in fact a little bit of a winner, but this one was a loser. Okay, so this one came down and took out the stop, but you wouldn't take that going into that 60-minute resistance. This one here was a little winner. This was probably around about, let's have a look, it's a 43 tick winner, but you don't go long into resistance. This short, you don't go short into support. Yes, it was a little winner. What we're trying to do is find fresh air, and this is what's happened recently. So if I just zoom in a little bit here. So we get this long signal going into this resistance for the current time frame resistance here in amber. We don't take it. But then we get it tests this resistance, comes back down, and we get a short signal with a roller coaster. This is the one we take. Why do we take it? Because there's lots of fresh air between here and the next support zone. How do we know that? We can simply just check the risk to reward. So we use the fib extension tool, click on the stop, click on the entry, move it along, and we can see we've got a risk to reward of 1 to probably 3. There's the 1 to 2 at the purple, there's 1 to 4, so 1 to 2.5, something like that. So great deal of risk to reward there. That's the one we wait for. Okay, that is the one, because we've framed our charts with those support and resistance zones. We've got a real good test of that resistance here. Then the roller coaster runs out of juice and wants to come back down again. We get a signal, then we go. And the green, if we just really zoom in here on the trading view version, see there's a little red arrow in there. That's your stop here at 76.20, and your entry is at 75.87. So that risk here is 33 ticks, okay, $330. Now the potential reward is more, is more than 70-80 ticks, so $780, but down to the next support zone. But we don't get out at that support zone because resistance and support can be broken. So we use the trailing stop position on the roller coaster just to manage this trade. So every time the candle closes, the trailing stop adjusts, so you need to adjust that, and eventually it gets taken out. So this trade was 165 ticks, $1,650. So the entry was at 0227 EST, and the exit was 0551. So a good couple of hours, 2 or 3 hours trade, but very, very sensible for me. A lot of the action starts in Europe. I live in Europe, so at this moment in time. So for me, this is sort of the gold pit already opened in Europe by half an hour. 3 a.m. EST is when the London Stock Exchange opens. So there's more traders. And this momentum really starts to build to the downside, and we're going through that European morning until we hit early hours of the US morning, and that is the trade for the day. Now, the returning up trade here we can check that risk to reward, because a roller coaster, again, it's, you know, we take the shorts and we take the longs. So we check the risk to reward. That's 1 to 1. Now that on a roller coaster, well, it's actually probably 1 to 1.3 in the middle of that zone there. That's good enough for me. Okay, with a roller coaster, I made a video recently and talked about with the roller coaster in particular, because it starts to print that trade and stop reasonably quickly here. We tend to accept anything 1 to 1 or above. Other different trading strategies, you've got a risk reward of 1 to 1.6 minimum. So this resulting long trade on the roller coaster going back up again was, you know, that was a trade. It wasn't a massive trade. Trading stock got took out at 16 ticks, but it was worth a try. Okay, so hopefully that helps. The roller coaster is a fantastic tool. It's a combination of stochastic MACD cross, and then it's got 3 points of control with EMAs with their corresponding position to each other, that gives you that signal to go long or short. And really what we're trying to do is follow that roller coaster movement of markets, but always making sure we've got enough risk to reward. This long here, there's no risk to reward there, because we're going into resistance. You can see how it found the resistance, then came down, and that was the big trade. We got another long trade coming up now, running out of juice a little bit, going into that the US morning, with gold open soon, and then the oil pit open. So, you know, that's the trading day done so far. Wait for the oil pit open and use a different type of strategy, which we call the range breakout, to actually trade the range of that oil pit open. Hopefully that helps. Check out the links below for the trading view versions of the roller coaster, and then there's another link for all the other versions on all the different platforms.